You ever notice how every high income person suddenly becomes a real estate investor the second they see their tax bill? They hate toilets, they hate tenants, but somehow they're in the landlord business. Meanwhile, there's this whole other thing where you can finance equipment instead of houses and still get big tax benefits, and nobody talks about it. EQ financing is basically Airbnb for equipment. Instead of buying a condo, you finance business gear, machinery, vehicles, all the stuff you pretend not to understand. And you might only put around 10% down while the banks do the heavy lifting. The equipment goes into a sharing pool, gets rented out, and suddenly you're in the equipment game without ever turning a wrench. Here's the crazy part. Because it's qualifying business equipment, you can use depreciation and expenses to help offset a chunk of your income, which is a big deal if you're making serious money. No busted pipes, no 2 a.m. calls from a tenant who just discovered gravity in their upstairs bathroom. The leasing structure is designed so the rental income helps cover your financing, and the tax benefits are doing their thing quietly in the background. Yes, you still personally guarantee the note because the IRS wants to make sure you're actually in the movie, not just watching from the couch. That's what helps you qualify to use those losses the way you actually want to use them. So instead of complaining about taxes every year like it's a seasonal sport, maybe you try something different. If you're a high income earner or business owner and this sounds more fun than fixing drywall, go to irsreso.com and book an appointment. Let them walk you through how EQ financing might work with your numbers, and maybe this year you get to keep a little more of what you actually earned.